FSN Radio. It's all about what's next.
This show is brought to you by Cloud Hard Assets. If you're looking for diamonds, gold, silver, go to Cloud Hard Assets, the place to go. Call them at 800-247-2812, 800-247-2812, and tell them Kerry sent you.
The Financial Survival Network. It's all about what's next.
And welcome. You're listening to the Financial Survival Network. It's Kerry Lutz. Well, unless you had your head totally stuck in the sand, believed all that stuff about truth, justice, the American way, free markets, market economy, and, well, you know what I'm talking about, then you had to have noticed that something is happening out there. Something's going on with the markets, with currencies. And here to hopefully explain it and enlighten you is none other than Bix Weir of roadtoruta.com. Bix, welcome back. It's been a while.
It has been. And 2014 was so boring for us silver investors that it's good to see that 2015 is shaping up to be something exciting.
Yeah, well, man, first you had the Swiss break the peg, and interestingly enough, not tell the IMF about it. The nerve of a country to not tell the IMF so everybody could front run it, especially the big bullion banks. And
that's an amazing thing, is that the Swiss supposedly didn't tell many people about what they were going to do, and the ramifications of that, which is gigantic for the FX market, which, I mean, you're talking about a market that's leveraged 50 to 100 to 1. There was companies blowing up left and right, and Switzerland had to know what it would cause if they did that. And I think that's one of the first hand grenades that's been thrown on the derivative complex in Europe. So expect more fallout from that as we go through January and February.
Yeah, I mean, you had major brokers take huge hits, and it just it caused untold grief. And I mean, who knows how much the big banks really lost on this, Bix, right?
Well, who knows how much anybody lost on it, really. There's a lot of talk. I think it's in Poland that the housing market was, a lot of people wrote into their contracts that it would be based off the Swiss franc, and everything's kind of going sideways because it's all interconnected. And then when you have one large FX trader go down, well, he owes money to another FX trader, and so on and so on. And it's just not just the foreign exchange. It's all the derivatives attached to it. It's all the contracts written in that are based off the Swiss franc. It's just crazy out there right now. And we haven't even seen the ramifications yet. I think they'll come out in later this month and in February.
Yeah, there are all these auto loans and mortgages also written in Hungary, in Swiss francs, all over Europe, Eastern Europe, a lot of loans written in Swiss francs because there was no confidence in the local currencies. So it's potentially tens, if not hundreds of billions. And the rumor that I heard is that the Swiss bank basically subsidized all these traders hundreds of billions of francs or euros, take your pick, in keeping that peg. So it got to the point where the peg became unaffordable, and basically its sole purpose was to provide the perfect trade to the powers that be, right? I mean, that's what a peg does when you get down to it.
And now the rug has been pulled out from under. They had to have known what they were doing. They had to have wanted the chaos to hit the markets at this point in time, which kind of comes in line with all the Road to Ruta stuff I'm doing, which says that it is the time, that the beginning of the end type of thing for fiat money. I see 2015 as a pivotal year. I thought it would happen by the end of 2014, but it was clear that they had the markets on lockdown all year. And now with the new year, I think there's a new plan in place to really take things down. And a lot of people are saying September. That's kind of where I am as well. But that would be a September destruction event. I think leading up to that, going through January, February, March, all that, we're going to see a lot of volatility everywhere you look. So it's time to hunker down, get your physical silver, physical gold, and just shut your door and wait it out.
You still think that the boys are absolutely controlling the precious metals markets, or do you think they've let up a little bit?
No. They've been on the same computer programs since the early 70s. I've researched it all. Alan Greenspan wrote the original programs. That's the only reason he got put head of the Fed. They're doing it out of the New York Fed in the basement of the Treasury. There's a huge trading floor supposedly on the basement of the U.S. Treasury, and all the markets are rigged 100% using these programs, and they throw as many derivatives at the price of gold and silver as they want, and oil and the FX markets, you name it. They're rigging every market, because in order to keep an unbacked fiat system going for this long, since the early 70s, you got to rig the prices. And that's what's been going on literally since the invention of computers back in, at least the computers that got put into place in the 60s and 70s.
And is that what's happening with crude oil as well?
Oh, yeah, of course. And it's real interesting, because I've done some work on one of the publications that came out with the original Road to Ruin publications from the Fed Boston, had a story about it's a bank, oil-related investment bank called Gusher National Bank. And in this story, and this is a Fed publication, in this story, Gusher National Bank makes huge bets in oil when the price is high, and then the price falls through the floor, and Gusher National Bank gets basically liquidated. And I think that's exactly what's happening right now. And it's been foretold by the Fed that it's kind of one of the ways they're going to crash the system is to crash the price of oil and make all these the oil companies and more importantly the banks that invested in them go bankrupt, and that will spread, because oil is the largest commodity bought and sold in the world. It's number one in terms of dollar amounts. I think it's $3 trillion a year or something like that. So it's a very important market, and they're driving it down with computers. They're driving it down as low as they can to take out these banks.
Gusher National Bank, I think, has sprung a leak, huh?
Well, yeah, and that's, literally, the Fed Boston wrote it up back in the first. This came out in '87. This particular pamphlet, and then they re-released it on January 1st, 2007, along with the Road to Ruin Comex and the Wishes and Rainbows. Really interesting stuff, and all of them on the Fed Boston website had these huge red exclamation points. And they're just like screaming at you. You need to look at this, understand it. Here's what we're going to do.
Yeah, it's there right here, bostonfed.org. You can find it. And they're like ridiculous looking comics. The animation on them is so pathetic. But
true, but it's all about the story. It's all about the story. And when you get into those comics and what they're saying basically that you need a gold-backed system. And the Fed is actually fighting, the Fed Boston at least, was fighting what they called the big people who might step on the little people. It's really interesting and just crazy to think that this is coming directly from the Federal Reserve Bank.
Yeah, it's funny. It says back in the 1950s, banks often gave away toasters to new depositors, and that made choosing a bank simpler. You went to the one that gave away the best toaster. Today, banks rarely give away toasters. That's because the banks went and had the federal government pass a law against giving away toasters and TVs. And choosing a bank is a little more complicated. It really isn't. I mean, you just look for too big to fail national bank, and that's where you put your money, right? Which one offers the best services and the lowest fees, right? Some banks charge a monthly fee if your account falls below a certain level to screw you out of your money, and higher interest on your account earns. Others may charge fees for many types of transactions. You don't want that.
It's really interesting. You go through, there are specific comics that are just as dry as can be, but the Road to Ruin one and the Wishes and Rainbows and this thing called Banking Basics, where they talk about Gusher National Bank, those are really important for people to read and understand.
Yeah, it's funny that they're here,
Oh, yeah. And they're still on the site.
Yeah, and this girl is at the teller's bank. It looks like she's got bills there and a stack of gold coins.
Look at that's a really cool part of that, the remake of that comic, the same one that has Gusher National Bank, is that there's people cashing in gold at banks. There's a woman waiting in line at the ATM with gold coins in her hand. And there's it's basically screaming, get your gold now. And this is coming from the Federal Reserve Bank of Boston. It's crazy that they would publish this with all these pictures. And another key thing in that, there's a picture of the Federal Reserve with the light shining on it and the door open, which is the exact opposite picture of the Gold Antitrust Action Committee's motto picture of the central bank or the Federal Reserve Bank in the shadows with the doors shut and everybody charging the bank, the Federal Reserve Bank. It's really interesting.
It's pretty funny. Yeah, so make sure you take a look at them because it's becoming more relevant. And what are checks and how did they work? Certain things have changed because now everything gets scanned. She's got her credit card, debit cards, stuff in there that's really interesting. Do banks keep large amounts of gold and silver in their vaults? Oh, God, this is really priceless.
Yeah, it is. It is.
Yeah. So, yeah, a lot of stuff going on here. And you just wonder how much longer it can go on. When is it going to hit? You just know it's getting closer,
Well, they've tried many times. They tried, I think the first real attempt was in 1987 when the crash of 87 was caused by computers basically crashing the system. And that's the exact day or a month after Alan Greenspan got into office. And the link between Greenspan and computers and the Federal Reserve and the crash of the market, you just can't, you can't dismiss it. And then they tried again in 2008, and we were literally hours away from the system crashing when Hank Paulson went in front of Congress and said, "Give me all your money. We need a bailout."
Yeah, give me money.
They attempted, but the debt hasn't been big enough. The situation hasn't been big enough. That's why Greenspan back in the 90s was adamant that the regulators not regulate derivative market. He knew exactly what was going on. He knew that the derivative market would crash the system because it's given the banks enough rope to hang themselves. And now it's a multi-quadrillion-dollar market, quintillion if that's a real number, and it's so out of control. They know that the next time that there's a crash, as long as we don't bail out the banks again, and I don't think Congress has the will to do that this time, they know the derivative market will take everything down and we get to start fresh. So that's kind of where I see we're going in September, October of 2015. But before we get there, we're going to see some really, really bumpy ride.
Oh, yeah. The volatility, you just see it's going to go sky high. I just see it.
You can feel it.
Yeah. I see it from our site. The number of people going to our site, downloading our show is just going up and away. And, it just doesn't happen for no reason. And, people are just, they see what's happening. It's just like you say, you got a ringside seat,
The amazing thing is, even after all we've been talking about for all these years and just going around and around and the rise of gold and silver over the past 15 years, even after all that, very, very, very few people know anything about it, have any investment in gold and silver, especially in physical. When even a lot of the diehard gold and silver bugs, they don't have any physical. They own mining shares and they own ETFs because that's what they understand. They don't understand that those are just promises, paper promises and electronic promises. And at the end of the day, I see no chance in the world that any of those will have any value because it relies on the entire system staying intact. And if you have all these banks going down, that system won't stay intact.
No question about it. And those ETFs, I just never see them paying off. They just seem so fraudulent to their core.
Well, they are. And they don't, if you read the prospectus, especially of the SLV ETF, JP Morgan is the custodian. They're only liable for $1 billion. They're not liable for any silver. And it's amazing.
They use sub trustees to hold the metal.
If any at all. I think a lot of the metal is held in the Comex warehouses, and that's perfectly legal. And I went back and forth with the CFTC regulator a long time ago, 5 or 6 years ago, or maybe 4 or 5 years ago. And I kept saying, well, it says here in the prospectus that they have to keep the silver in the vaults in London unless otherwise specified. Doesn't that mean they can keep it everywhere? And he's like, well, yeah, but it's got to be in delivery form. I said, well, that's pretty easy to do, to keep it in the Comex warehouses. But you guys, the CFTC, is looking at the Comex warehouses and judging that metal versus how many derivative contracts are written and traded on the Comex. So basically, you're double counting the same physical silver. And we went back and forth on this, and I finally caught him in basically him saying, yeah, they can do that. And then he stopped talking to me, and I wrote it all up in an article that posted on my site. But it was truly an amazing thing how,
if there's nothing else you need to speak to me about, Mr. Weir, this conversation is over pretty much,
yeah,
right?
Exactly. I never heard from him again. His name was David Cass, Kass. And I saw his name come up somewhere.
Yeah, I've seen that name before.
Yeah, it came up in a different place. So he left. He was a lawyer, and he left the CFTC probably after I, yelled at him for a full month.
Yeah, I've seen that name before. He was there as of 2009. I've seen his name around, but yeah, I think you're right. He's probably off in the private sector, probably working for a too big to fail.
Yeah, well, that's what they do. Yeah.
It's a revolving door. I've seen it myself, but we won't give out any information. It's giving his whole life story here, but we don't want to give that out. But yeah, Ted Butler had him here. He was nailing him in 2010. And well, we'll just leave that. But yeah, I think you're right. I think this is the year. I hear it coming from so many other sources. And look what happens. Switzerland gets rid of the peg, and a world of instability opens up in no time at all.
It's great. I mean,
look at it.
That's what we need. And it should be surprising to the mainstream, and it was, I think, that Switzerland would do this without any warning. Normally they'll give within the next 3 years we'll start lessening the peg, but no, they just pulled it out and said, "Hey, that's it. We're pulling the rug out." And clearly, it was targeted at some probably hedge funds or somebody who was in an offside position, and they just got destroyed. And I think we'll find out more and more over January, February, because the derivatives take a few weeks to settle out.
Well, look, it cost them hundreds of billions of dollars to keep this thing, all to keep Nestle in the country. Because Nestle said, if you don't do it, we're going to move out of the country. And they said, all right, we're going to do it. And then they've got all these, they've got a handful of pharma companies, right? Because Switzerland's always been big on pharma. And then they got some chocolate companies, because Nestle's really a food company. And banks, right? Because the banks' profits are looking bad. And, so finally they just said, look at the cost for all of the people who live there, right? Who are getting screwed. They wanted to raise the minimum wage to $26, an hour. Remember that? That got turned down, that referendum?
Yeah.
Yeah. So finally they just couldn't take it anymore. Country was going to go bankrupt.
Yeah, but I don't think it's the obviously those are the things we see, but I don't think it's the things we see that's really important here. I think the important things are in the back rooms and the derivatives that included the Swiss franc and that absolutely needed the stability of that currency, and that 30% move in a blink of an eye is. I mean, that is unheard of in any currency. I mean, the only thing it reminds me of is maybe when they slam silver 30% in a couple of days. But I mean, that doesn't happen in currencies, and it did. And there's blood in the streets and there's blood in the back rooms. That's the stuff I want to see.
Yeah, like you said, the next month or two, when it starts coming out in the earnings reports, that's just going to be a beautiful thing to see, because, these traders are not nice people. When they're at work, when you see them after work and they've taken whatever substances they need to come down from work, because let me tell you, one of the highest substance abusing professions, professional traders, because, sometimes they've got billions of dollars worth of risk, Bix, riding on their shoulders, and it's really tough work. I don't blame them for looking for the riskless trade, because is a tough freaking job,
It It is if you're not in the know. If you're in the know, it's a no-brainer because you're cooperating with your friends on where you need the price of things to be, and all the emails that have come out with the the LIBOR scandal, and they do the same thing in gold and silver and oil and everything, being a trader when you're in with the bad guys who rig it must be the most calm, cool, and collected job ever because you're going to win every bet.
Yeah, well, then it's okay because if you've got the riskless trade, that's what Martin Armstrong says. They're always looking for the riskless trade. If you got the riskless trade, then you're set for life. You don't have to worry about anything. But they're always looking for the riskless trade. And, that's only part of the job. When you don't have the riskless trade, forget it. It's hell. You're fighting there with the sharks.
And I think something really interesting that people really don't think much about is on the Comex, you got your longs and your shorts on the Comex, right?
Yeah.
What people, people have put in shorts and longs, try to hedge their position and all that. Mm-hmm. Well, unless you have a complete hedge, unless you have a long with a short, without a naked short, you are your investment is limitless. Your loss potential is limitless.
Oh yeah,
because there's you can go down a certain amount. You can only go to zero going down, at least these days. But it can go up a limitless amount, and limitless is a pretty high number. Thinking like $100 silver, $1,000 silver, $10,000 silver, it just gets ridiculous. That's how the Comex is going to end. And I know they put trading limits or a price limit, kind of brackets around. I think it's $3 around silver for it to move in a day. Mm-hmm. Just recently, why would they do that unless they knew something gigantic was coming down the line?
Yeah, they must have suspected this, huh?
Well,
and other
they've known for years that the game can't go on forever. The question is, what day? When will it end?
Yeah. Yep. No, that it had to happen. It's going to happen. That's the thing. It's as inevitable as death and taxes. It's going to happen, and it's just a question of when, right?
Well, Tom Petty says the waiting is the hardest part.
Yeah.
One of my favorite songs. I play that song again and again in my office. I'm like, all right, they want to keep playing these games, especially in 2014. I mean, that was a planned takedown all year long. And, it was kind of like the planned takedown when, remember the silver drive-by shooting where they brought the price of silver from $20 to $50 in 2011, right at the beginning of the year, and then they slammed it down back to $20 over the rest of the year. Mm-hmm. 100% planned, 100% orchestrated. That was a J.P. Morgan deal. Yeah. They put their head guy right up there with Obama as his chief of staff, and they rigged that market, and that was what they did for that year. Last year, they just said, okay, here's what we're going to do. They said this in January. We're going to just slowly force the price of silver lower, and just kill all sentiment. Exactly. Now, the question is, what are they going to do for 2015? And I believe that they have built the bubble and everything so large that they can't control it anymore. And the only way out is to destroy the system. So that's what I see coming throughout the year, culminating in September, right before the end of the fiscal year for the United States.
So you better get your gold and silver shortly, or you're never going to be able to get it, are you?
Well, physical silver under $20 is a screaming buy these days. I can't emphasize that enough. It reminds me when the bankers back in the early 2000s sent the price of silver from $10 to below $5, and everybody was like, "Oh, silver's dead. It's not a good investment anymore." And then all of a sudden, it just jumps and keeps moving. But under $5, I was buying silver, with both fists. Okay. Right now is the same thing. If you have money left, if you have anything, convert it into physical silver under $20. You'll be really happy by the end of the year.
Yeah, I'm in complete agreement with you. I just see it as a screaming buy. On that note, roadtoruta.com. Subscribe to Bix's stream. You won't be sorry. And you'll find the link on financialsurvivalnetwork.com. Bix, I can't thank you enough for taking time out to come talk to us. And we'll be talking a lot in the coming months. There's no doubt about it, because it's going to explode. Thanks so much.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.